Central Bank of Nigeria, Godwin Emefiele, has advised investors that he expects the true value of the naira to be between 430 and 440 naira to the US dollar. But meanwhile, earlier in the week, the Debt Management Office surprised the market by selling bonds worth over 2 times the amount offered at its June bond auction calendar announcement. Dumebi Udegbunam, a fixed income trader at UBA, joins us now to unpack some of those stories. Dumebi, thank you so much for your time. I think a good place to start would be to get the market's reaction to the central bank's governor's comments around the exchange rate and what he felt perhaps is fair value. How did the market react to that?
Market participants have always emphasized or more or less calculated the true fair value of naira. So this coming from the CBN was just a confirmation. So we did not really see a reaction in the market from that statement. We've all seen this and priced this in our daily activities or put it in our calculations in the market. So this did not really cause a panic in the market. However, but this is a clear sign showing that we are getting to a point where we might see a strong convergence in the market and probably have a general true fair value of the naira.
So if we are to see that convergence, if we are to read anything from that statement, then it does suggest that the I&E window rate may weaken slightly to something closer to 430 before the end of the year. Do you get that sense as well?
Well, that might happen. At the same time, if the CBN keeps on intervening in that market, then that might not happen as soon as you expect. It's probably Q4, but not Q3. We might see that happen, but the intervention has done a good job in trying to stable the exchange. So we might not see that happen anytime in Q3. A possibility in Q4, I would agree with you.
Okay, let's unpack the surprise move by the DMO to sell more than double what they had advertised. How did the markets react to that, and what do you think is the story behind that move?
So before the auction, actually, the market has been faced with illiquidity. As at yesterday and the day previous before the auction, we've been in a repo. As at today, the system liquidity is at a negative 150 billion. So before the auction, we're moving towards a situation where the whole market was faced with what we call a short squeeze. So a lot of people needed to buy for 2 reasons: cover up their short positions and also try and balance their portfolios to end H1. So we saw desperation in the market, which was good, and the DMO took advantage of that to drop rates from the previous auction rates. The 2020 to 2027 was at 13.1 but closed at 12.74. Same happened to the 35 and the newly issued 50. We also a drop in rates. The 2035 dropped to 13.5 from a previous 14, and which is all in turn reduces the general cost of borrowing for the government. And we're able to, this is the highest amount they raised in the past 6 months. In Q2, we saw 260 billion raised in April, 281 billion raised in May, and right now we're seeing a large amount of over 362 billion raised in the month of June alone, bringing the total to 1.4 trillion raised in the first half of the year, which reduces our deficit on domestic borrowings to 1.7 left to be raised.
All right, so clearly the DMO taking advantage of an opportunity that the market presented there. But how soon do you think the market will normalize? Because I'm also hearing that in the TBO markets, there's been very little activity there. Can you just give us a sense of the liquidity in the market right now, and how soon you think things would get back to normal, so to speak?
Okay, so let me just give you a prediction or a futuristic view of where we're going to be start of Q3. So we have a bond maturity on July 15th, about 526 billion maturing. We also have coupon payments coming about 240 billion, and we also have treasury bills maturity, what this means is we are going to be very liquid going into July, which might further still spur bullish sentiment. And going into the July auction, we might probably still see a drop in rates in that auction. So with all this happening, the DMO is comfortable at these levels and are willing to ride the curve to benefit from the drop in rates.